Hi, Gerardo Perez here with GP Accounting and Tax Services, coming to you from our office in Hayward, California. So today we'll be going over Schedule A, Itemized Deductions. And the main thing to take away from this video is that you will be using either your standard deduction amount or your itemized deduction amount, which is all of these items here, summed up as your deduction of your adjusted gross income. So you compare the sum of all these expenses behind me and total them up, and if that sum is greater than your standard deduction amount, then you actually use your Schedule A itemized deduction to offset your adjusted gross income, and vice versa. If your standard deduction amount is greater than your Schedule A, you use your standard deduction. So starting here with number one, medical and dental expenses. So if you have unreimbursed medical and dental expenses throughout the year, then those are reported here on line one. However, there's one limitation to that. If you can only deduct the excess of 10% of your adjusted gross income. So the way that's calculated is you multiply 10% by your AGI, and any unreimbursed medical expenses in excess of that 10% is actually deductible here on the first section of the Schedule A. Next is taxes you paid. So an example of taxes you pay that are deductible would be property taxes. So if you own a home or some type of property and you pay 2 property tax payments throughout the year, then that's actually deducted on section 2 of the Schedule A. Also, state income tax. So if your employer withholds state income tax throughout the year, then that is also deductible on your Schedule A. Number 3 here is interest you paid. So an example of this would be mortgage interest. So if you own a home and pay a mortgage, all the interest you pay on your mortgage is deductible in section 3 of the Schedule A. Also, home insurance premiums, home mortgage insurance premiums, I should say, are deductible also on your Schedule A under section 3. Number 4 is gifts to charity. So if you make a cash contribution to a charity, or you donate some type of tangible item to a charity, then that is also deductible on section 4 of your Schedule A. One thing to keep in mind when making charitable contributions is that they have to actually be to a charitable organization. So if you donate goods or cash to an individual, that is not deductible on Schedule A. Only gifts to a actual charitable organization are deductible. One thing that I did not cover for number 4 is if your gifts are in excess of $500, then you also have to file form 8283 with your 1040 if you donate in excess of $500 of charitable contributions. So my team is telling me to go this way for number 5 and 6. So starting with number 5, casualty and theft losses. So if you were the victim of some type of theft, then that can actually be deducted on part 5 of your Schedule A. And make sure when you're reporting this that you do not include any insurance payments that you were reimbursed with. So if they had something stolen from you and you received a reimbursement check from the insurance, that part is not deductible in section 5. Lastly here is number 6, which is job expenses and certain miscellaneous deductions. So if you have unreimbursed job expenses such as job travel, union dues, job education, those are all deductible here on section 6. And those are all reported on form 2106. If you're in the construction industry and you have protective equipment and clothing, that is also deductible on form 2106. One thing to keep in mind when you're reporting mileage though is that you cannot deduct commuting mileage. So if you commute to and from work, that mileage is not deductible. But for instance, if you're a salesman and you travel to clients throughout your area, then those miles are in fact deductible. Also, you can deduct your tax preparation fees. So in 2016, if you paid a tax preparer to prepare your taxes for 2015, then the amount you pay to your tax professional will actually be deductible on your Schedule A. So if you do in fact come to me and pay me to do your taxes, that will be a tax deduction on your 2017 tax return. One thing to keep in mind when calculating your unreimbursed job expenses is there's a 2% limitation. So similar to number 1 with the 10% limitation, number 6 has a 2% limitation. So you multiply 2% by your adjusted gross income, and any unreimbursed job expenses in excess of that 2% is actually the deductible portion of your unreimbursed job expenses. So that'll do it. We covered Schedule A. Please feel free to reach out to me and make sure you subscribe below. It'll be much appreciated. I look forward to seeing you next Wednesday. Have a great evening, and make sure don't forget to subscribe below. Have a great evening. I look forward to seeing you next week. Bye-bye.